Hey everybody, it's Pete. Welcome to a new episode of Stocks for Breakfast. And today we're going to discuss how to be in the right stocks. One of the biggest problems that I see personally, especially in the boot camp with new traders, is there's this moment of overwhelm where you feel like there's just way too much to look at. Like everybody's calling out stocks, I'm calling out stocks, community members are calling out stocks, you have your own stocks, and then you actually freeze because you're not actually sure which stocks you should be looking at. I understand that, but it can be quickly drill down to the right stocks. And when I say the right stocks, I mean the right stocks for you at that particular moment in your trading career. And I say career in quotes because some of us are doing it full time, some are doing it while they're having their full time job, and it's kind of a side hustle, which is absolutely perfect. I'd actually think that's the smarter thing to do while you're learning. You should never quit your job to become a trader without a long track record. When I say long, I mean a minimum of 6 months, consecutive 6 months of earning what you normally earn at a full time job. It's amazing to have that dream, but trust me, I made the mistake. I'm telling you flat out, I made that mistake early in my career where I just couldn't wait to do it. I jumped in, it was the internet boom, everything was really exciting. And you take this one little window of the market going crazy and you change your entire life around it. The smart way to do it is to pay attention to everything that we do here, learn, get better, get better, get better. And then eventually, when you have that track record, then you could make that decision. Best case scenario, you could do both, where you keep your full time job and you have this beautiful side income that matches your full time job. And now you've doubled what you earned. What we're going to do now, though, is we're going to talk about how to have focus. Now, before we get to the actual mechanics of how to have focus, I want to briefly touch on a mindset shift that a lot of people mistakenly have. And I made this mistake. Everything that I teach is from me making these mistakes way back in the day, like 2000 to 2003, back when I was a young trading pup. Is that for some reason we believe that focus minimizes or reduces our opportunities. And that's not really the case. What focus really allows us to do is it really allows us mastery. It allows us to really gain confidence and conviction in our ideas, and it drills us down into how to operate that business. And even in business in general, you think about it, franchises do one thing. They make pizza, or they make coffee, or they're discount wholesalers. They're not trying to be everything to everybody. They specialize in one thing. And what we're going to talk about today is narrowing your list that matches your goals, your resources, your risk tolerance, your experience, your skill level, and drills it down to being in the right stocks. So we're going to cover how to do that right now and how to put the right stocks in your watch list so that you know that we're known for order flow. Order flow is either in sync in all of those stocks or it's not, and that's going to affect your conviction level. So what I mean by that is, let's say the market's going higher and you happen to be watching one individual sector or one individual industry or groups of stocks within that industry. If you're looking at that watch list and two stocks are green, two stocks are red, one keeps fluctuating back and forth, it's not really obvious. However, then there's other days where all five of them are lit up green, bright green, and they're all moving in one direction. So in that second scenario, all of the order flow is on the same page and you can have conviction in that industry at that moment. Now, sure, you can trade days where only that one stock is performing good. But remember, our job as traders is we want to stack the argument. We want to have one good reason, two good reasons, three good reasons, four good reasons for like, wow, everything's on the same page. I should be involved in this stock because it meets all my criteria. And there's a lot of other people, because they're all green, in this industry right now, trading this industry right now, buying this industry right now. And that's what we're going to take a look at how to narrow that list down. If you find these videos helpful, please click down and subscribe. I'd really appreciate it. If you've had some success, definitely let us know. That'd be great to share in that success with you. And if you want to trade with me in real time, click down and learn about the boot camp. I think you'll love to find out about that too. So we're going to head over to the screen. We're going to do a little bit of screen sharing here. And we're going to start out using this free software called Finviz.com. It's a very, very popular online software for finding ideas. Now, the beauty of Finviz is how much you can do. The downside is all of that can be overwhelming and distracting. You can see how many different ideas and not only ideas, but how many different ways you can take to get to your list. what we're going to do is we're going to start over here at groups. Now, if we go back over here to the homepage, you could just look at the S&P 500 and focus on stocks there. But for most newer traders, that's still a lot of information. So we're going to go down to groups, and we're going to take a look at, you could look at 1 week, 1 week, 1 month. So we're going to focus actually on 1 month, and we're going to expand it out to a couple of different sectors to really give you an idea of how to find stocks within that sector that would go into what we would call a watch list. So without even going over to the charts, and I guess really the time frame doesn't matter because we're looking to drill down into the sectors. Let's just take a look at technology, for example, right? We're gonna head on over to technology, and we're gonna head on over to financials, and then we're gonna head on over to energy. So just for the sake of this conversation, we're going to break it down like that. So we're going to start out with technology. So we're going to click over here. We're going to click to all, and you can see there's 619 stocks that meet the technology criteria, but we want to drill it down even further. Now, normally my criteria is an average of 2 million shares per day, but for this conversation, some people are probably swing trading. So we're going to go down to 1 million. Now, why do we do that? We do that because we want liquidity. We want every single day for there to be institutional activity where there's volume being traded. And that also helps us manage the downside. So there's at any point, these stocks could be in play because of that liquidity. And it also means that we can manage the downside because there's typically bids and offers at every price level. So if we need to get out of the trade, there's probably a quote there. The other side of the trade we need now is volatility or average daily range, and we filter that down by average true range for $1.50. So $1.50 average true means that from low to high, on average, it moves $1.50 minimum. It could be more, it could be less, but a minimum. So we have liquidity and volatility, and that equals tradable opportunity. Now, you see that brings us down to even 106 stocks. So let's just say, for argument's sake, you like trading Apple. Well, now we need to see what stocks are similar to Apple that we can filter down. So we're going to right click and open up Apple, and you'll see it's technology, but broken down to the subgroup of consumer electronics, which is now only 14 stocks. So we're going to break this down even more using a similar way of doing it. We're going to go down to an average of 1 million shares, and you can see that broke it down even further, and an average true range of $1.50. So Apple is in a universe all its own. So you'd have to watch Apple on a wider portfolio, such as technology in general. Now we're going to break it down to, let's say, Akamai. Akamai also in the technology sector. And this is software infrastructure. So this will be a little bit wider. So 88 stocks. So now we're going to go and break it down by the same thing. We're going to break it down by an average volume of 1 million shares. And then we're going to break it down by average true range of $1.50. So now that broke it down to 20 stocks. So now you would say, okay, these 20 stocks represent the software part of technology, software infrastructure. So all of these stocks meet the criteria, and they would all be in an individual watch list. So you'd be looking at them intraday from a change perspective and paying attention to how they're trading that day and see is all of the money flying in there. So for example, if Net was strong, if ZS was strong, if Microsoft was strong, if Adobe was strong, you'd be looking for sector rotation into those ideas. So you keep breaking it down. Now we're looking at energy. So let's do the same thing with energy. There's 299 stocks. We're going to break it down by volume. We're going to break it down by average true range, and you can see 9. So now there's 9 stocks that meet the quote unquote energy stock criteria. Now, if we want to break that down even further, we know that CVX is a very popular stock that you might want to watch. So now we get down to oil and gas. So energy is the broad sector, oil and gas is the industry. And now let's break that down again by the same criteria. Over 1 million shares traded. Remember, we want liquidity. And average true range over $1.50, we want volatility. And that brings it down to 1. So you can start to see now how you're breaking down these stocks all the way down to the individual pieces of within that large sector. So if we go over to sector, go back to the homepage, and if we start with groups and go to overview, you can see there's primary sectors. So there's various ways to get here, but the bottom line is that you want to keep whittling it down to stocks that makes sense for you. Now, again, it might sound like you're working your way down to less opportunities, and that's not really what you're doing. What you're doing is focusing. And think about anything great that you've accomplished in your life. You focused. You got to be really good at that. You gave it all of that time. I don't care if it's video games or craft, arts and crafts, or whatever it happens to be. Hedge funds are built around a certain type of trading. Why wouldn't we want to drill ourselves down to get mastery over a certain type of trading? Now, there's different ways of trading. You can focus on certain sectors and get really good at that sector. And then after you get good at that sector, now you break your strategy down and apply it to that sector. So some sectors are bigger, some sectors are smaller. You might want to do like I do, is have multiple sectors. And then from one day to the next, certain sectors are in play. And then once you understand those sectors and how to find the right stocks for that day, which could be percentage gain, which could be volume that day, which could be percentage change from the open that day, percentage change from October 1st, for example, whatever that month is starting. You start to whittle it down now to find the right stock, the right sectors down to the right industries and the right stocks within those industries based on the criteria. I would watch this video once or twice because it will give you an idea of how to break it down. But more importantly, it creates focus. And when you have focus, it's easier to execute. It's easier to follow the plan because your eyes aren't glossed over looking at everything. You're looking at something specific. So you could decide you want to trade the financials and the tech stocks. They're in play most of the time, right? You might decide you like energy stocks. You might decide you like healthcare stocks for whatever reason. Maybe it has something to do with your job. But once you break it down, make that your list. And then outside of that industry or sector specific list, then you want to have a list you might call your trading universe, certain stocks that you trade every day, no matter what, because they're in play every day. There's news every day. They're volatile every day, and you feel like you could read them. So you have your list of your universe every day, and then you have your sector breakdown of stocks that you would trade, or at least keep in your eye on your screen every day. And then depending on which ones are in play that day, and again, in play is something that we teach in the boot camp, depending on which ones are in play, that's where your focus should be that day. So you allow yourself and you put yourself in a position to win because you're in the right stocks on the right day with laser-like focus. And that's what it takes to be a professional. When I say professional, I mean somebody who makes money and treats this seriously on a regular basis. Not somebody who's looking for somebody else to give them ideas, not somebody else who's looking to tell them what to do, somebody who's looking at the market and saying, I'm in charge, I know what I'm doing. That's one way to break the market down. I hope that helps. Have a great day.